Let's talk about whether or not you are worried, given the market carnage, about the scene in technology, media, and telecom.
No, I think when you look at what's going on in the Hong Kong government, just announced today, Dominic, the governments are going to do what they can to stimulate the economy, and I think it's going to be government policy worldwide to force interest rates up by fiscal policy. And so I think you have to be very cautious on bonds. And in technology, I think I go with the saying, the race isn't won by the strong and the swift, but that's the way to bet. And I think you have to go with Apple's brand franchise and Google's lack of exposure to China. Plus, Google has probably two of the best businesses in the world in terms of free cash flow generation, and YouTube and the more or less quasi-monopoly in the search business. Both of those stocks are very reasonably priced, so those would be the first places I would go in technology. But I think we've got a very, very major buying opportunity at hand here. If not today, probably within the near future. As I think the virus is going to spread first, but I think you have to bet that it's going to be contained. The news in China, I think, is very good on the containment of the virus.
All right, so let's talk about whether or not you feel as though there are places that you want to stay away from with regard to technology. We know the mega caps you kind of like here, but what exactly are the types of stocks that you want to avoid given the concerns we have right now?
Well, I want to avoid the stocks, Dominic, with problematic valuations. The Ubers and Lyfts of the world. I think the stocks that I can't make any sense of the multiples. I love the Netflix business, but I just don't like paying 70, 80, 90, 100 times earnings, depending on how far out you look for that business, especially when I can buy the streaming earnings in Disney Plus at probably a 13 multiple. So I would stay away from the highest valuation stocks. Where I would go first would be Apple and Google. Next would be Facebook, and the rest of them I think I will leave to others that are more adventuresome. Because I think rates are going up.
All right, so let's talk about maybe perhaps relatively more reasonable valuation. We've had you on quite some time in the past. You've been a notable shareholder of Disney. It only trades at a relative 21 times earnings at this stage here. Late breaking news yesterday, Bob Iger is going to exit his role as chief executive after nearly 15 years at the helm. He's being replaced with the company's former head of parks, Bob Chapek. Here's Iger with our Julia Boorstin yesterday on the timing of this CEO exit news.
The timing is, unfortunate, but that's not anything that we can control, and it certainly didn't play into the timing of this decision.
Larry, it's been quite a run for Iger at the helm of Disney, for sure. I mean, 425% returns during his tenure as CEO, leading Disney through a number of major buys, including 21st Century Fox for more than $70 billion. What's the future for Disney? It is more traditional media. It's not Netflix. Does Disney have a bright future with Chapek at the helm?
Well, I think it does, Dominic. And I think here you have to give kudos to the interaction between Bob and the board, even though there's not a whole lot of comment about what the board's been doing. But this is kind of writing the book on an orderly management transition. And I think the market consistently underestimates Disney, and I think the new chairman is going to inherit a very, very powerful hand. Let me give you a couple examples. He's from the parks, and the parks are a wonderful business, but people don't really appreciate the technology of the parks. So they have two rides right now, one in the Avatar ride and then one of the Star Wars rides. These rides are so powerful that they're not even on the Fast Pass system, which tells me that the demand for people to go to these rides and to go to the parks is way, way more. There's way more strength than the market believes. They have one attraction in there, making your own Star Wars sword. I understand the attraction is sold out for the entire month of March. So you have, I think, demand for the park services at a much stronger level. In Asia, the parks are partners with the Chinese government. So the Chinese government is going to do what it can to stimulate demand once the virus threat passes, the handout of money in Hong Kong, I think, is clearly going to help Hong Kong Disney, which is owned by the Hong Kong government. So you have government partnership in Asia helping them. And I just think at this kind of multiple, the new chairman is going to inherit a very, very experienced chief financial officer. And the company is well practiced in the art of buying stock when the market gives us the opportunity. So you have the operational strategies of the company that are very strong, and you have probably as good a financial management as possible with an unparalleled brand franchise and a multiple that's only a little bigger than the average multiple. So it's a wonderful, wonderful combination, and I wish Bob the best. He did a great job for the shareholder, but I have no doubt that the board, which is a very strong board, has left the company in wonderful, wonderful shape.